what's important here is this. If you measure from this low here, which dates back to September 17th, up to the high, the 61.8 retracement level. So I basically, this is the way I do Fibonacci, and this is the way you could learn from this. Okay, let me, actually, I'll take this off, and and what you need to do is you need to be able to like set your, can you see that? Yeah, you could see that. You have your values here, and you could set your values, and you could see this one is 25%. I have that one turned off. 38.2 I have on. I don't know why there's a 0.48, but that's off. I have a zero point 0.5, 61.8, and 0.79. I have all those turned on. So when if you have a charting service, you could go into your charting service and you could set those the way you like. This 0.79 is a level I really love, but 0.618 is a level that I look at for longer term trades when the level comes into play. So what we do is I put my little thing, Fibonacci retracement level. I put it on the low. Mine is magnetized, so it just hits right on the high. And here's our levels. I can take this now and pull it over here, so I can, so it doesn't sort of clutter up the actual bars, and that's how I figure out my levels. So you can see the 61.8 level on the bond market came in at 147.19. And on Thursday, it drove through it, but it held. And at this point, if you're short this market, you have to be looking. This is the 200-day moving average, and you have to be looking somewhere between 147.19 and this 200-day moving average. Pull out your PowerPoints, and you have to be looking to cover your shorts down here. Now, I started talking about the bull, but I really wasn't, coming out with, okay, I want to buy it, okay, I want to buy it, until kind of Friday is when I think I wrote something to the nature of, it just seems that anytime this market has a sell-off like this, in 2012, when it looks its worst, it's time to buy it, and then we had the turnaround on Friday, and now today's kind of a boring day. But keep an eye on this 61.8, because if we start firming back up here, I think then we'll at least have a look at halfway back at 150.24, and if depending on what Wall Street wants to do for us, we can go back here up here to the 152.21 level. So that's the way I look at Fibonacci. That's the way I look at things. Here's the treasury note. Same thing. This was a reversal day. The objective is a trade above here. We haven't gotten there yet. Your stop basically goes below the lows. I mean, this is boring, plain as can be. But look at the 60. Again, we measured from here up to here, and the 61.8 level comes in at 132.22 and a half. What are we trading right now? 132.21 and a half. So, for 3 consecutive days, and these 2 consecutive days, it closed above it. I'm not sure where it's going to close today. Close above this 61.8 level, but I'm leaning towards the buy side of the trading card here. But you can see, and that's why I'm kind of excited about doing a little Q&A today. So, where did I want to go? Dow futures, boring. There's nothing there. There's nothing there. I mean, there's just nothing there. Little, tight range going back up. E-mini S&P, same thing. Same thing, nothing there. It looked like we could fall out of bed instead we're having this little correction day. Is it? I think it probably is. Everyone's watching Apple. Apple's back up to 508. Traded down to 501.23 was the low. That's a new 10-month low in Apple. They found buyers. Here's a chart that you got to keep an eye on a little bit. This is that NASDAQ chart. Obviously, if Apple's not performing too well, the NASDAQ's not going to perform too well. This is a double top. What we need to do is we need to get a trade convincingly below this 26.23. I think Friday's low was 26.15 half, but the market went back and closed above it. Today's low here is now 26. Is that 22 and 3/4? I think it is actually 22 and 3/4. So I mean, we've got to get below this 26-23 level, and we got to close below this level. And if we do, then the objective is 25.48, which basically here's 25.35. So right in this area here. And the way you measure a double top, you measure from the top to there, and you add that onto, and that's your breakout. That's your objective. Other than that, I mean, I tried to sell this crude oil today here at 87.68. This, if you move this out here a little bit, 89.25. I mean, this is the way I think for a living. You know what I mean? I mean, look, the 50-day moving average comes in today at 87.66. I went and looked at my PowerPoints. I had a point at 87.68. I'm a little bit bearish crude oil, so I said, okay, I'll sell it there. We got close. 87.62 was the high. What's it trading right now? 87.54 again. So it's firmed back up with Wall Street firming up. I canceled my offer. I wanted it the first time up. We didn't get it the first time up. So gold. What am I working on? I'm working on. My son Santino actually sold his gold last night at right near the highs, just below 1,700 even, and I think he set an alert when it went through the last night's lows at 1690. He moved his stop all the way back down to 1691.10, and he got stopped out, but $800, and he's still in bed. Yeah, I mean, he's still in bed. I mean, tell me that he hasn't learned practicing the art of keeping it. Anyhow, where was I? Let's throw up a gold chart real quick. And you can see we've had this 50-day moving average is rounding. We went up there. That was last week's high at 1725. That was after the Fed announcement. And I mean, something stinks here. We did our weekly points in the gold, and I think the weekly pivot is 1704.20. So when he gets out of bed, I'm going to mention to him that, if you're not going to trade today, you just may want to put an offer in at that 1704.20 level and see how it goes. I'm trying to see, do I have anything else for you? I mean, shall we look at the yen? Why not? Let's look at the yen. I mean, let me see who's in the room. Carol, Celeste, I've been talking about this yen for about a year. Gary Hess and Sita, I've been talking about it for about a year. I see Jerry West is in the room. Hello, Jerry. How are you doing, old boy? Happy holidays to you. Jerry Friedman, happy Hanukkah to you, old boy. Actually, I think Hanukkah probably just ended. So, but better late than ever. But yeah, I mean, I've been talking about this yen for a long time, and I'm a little bit disappointed that it's only down 40 today. I mean, at one point it was down over 100 last night, but I'm short, and this is telling me I have to stay short. And this is obviously a head and shoulders top. And we've broken the neckline, and I really would like to see this 50-month moving average here at 117.95 before I even start to think about am I going to do any covering or whatever. So that's our yen. I mean, I basically for new people in the room, if you look at this support line right here is parallel with this support line. This support line is parallel with both of these. And when you start seeing things like that, that's what got me going in October. And that's all I did. I counted 1, 2, 3, 4, 5. It broke in the 5th month. I excluded this month because it didn't hit on the line. But here we have 5 more months that hit right on the line. 1, 2, 3, 4, and the 5th month was October. And I said, that's why I'm selling it in October. And I mean, it's been a good one. This trade right here has doubled my trading account in 2 months, basically. Where's your stop on the yen now? Jeff, I don't really use stops. My stop is financial pain. I mean, you gotta look at if I don't know. You know, it's funny because, and I want to discuss this today. I mean, if you're a novice trader, you have to have stops. But the way I look at a trade, if you're thinking about the negative before you get into the trade, then you're jinxing yourself already. I didn't get into this trade where, when I got into this trade at 117.19 was my 127.19 was my initial, you know, my initial entry. I said to myself, well, I'm looking for this to break, so I'm looking for 22 handles, 2,200 points on the downside. So I guess my stop has to be 300 points on the upside. And I took, I think, about 120 to 130 ticks of heat. But knowing that it was 300 points, I never even put the negative into the equation. So, at this point, my stop my stop has to be above 120 somewhere. I don't think it's going there. And I'm getting a little bit of the old buy the rumor, sell the rumor, buy the fact feeling in my gut today about this trade. But you know what? I'm not trading anything else. I'm basically short the pound, and I'm taking heat on that. And I'm short the yen. I'm not trading anything else. And we'll see how it goes. I mean, I truly believe that we're going to see this market follow through this month, follow through lower. So we're sitting here trading in a range basically in the yen all day long. We'll see where it goes for the rest of the day, tonight, tomorrow. I'm sorry, Jeff. I can't give you a better answer, but I mean, my pivot, I will when it's time. I mean, I put in a stop last night at 121.01. So when I went to bed, my stop was at 121.01. I mean, you don't want to hear that I have a 150 tick stop, but I have to put in a stop somewhere when I go to bed. And that's where it was. So I don't know. It's the way I trade. I have 800 points in this trade. So my real stop, my real stop is going to be if I give 300 of it back. Then that's going to be where my stop is. 122.50. Do I have 800 points in the trade? I may even have 900 points by now. Anyhow, so that's it. That's I honestly don't have much for you. So what I really want to do now is kind of open up the room to anyone. I am going to. I do notice that there's still a lot of people here that haven't signed up for my service for the new year. So let's just throw that in there. You can click on this Trading Pub link, and you can, I'm offering. It's basically $150 a month. So, I did the old marketing thing. Offer them, a quarter and throw in a free month for $5.99. So that came out to $150 a month. Or sell them 12 months for $17.99 and throw in a free month. So that's 13 months. It's a little bit cheaper the longer you go out, but it is what it is. No big deal. Throw me questions. I'm ready for Q&A. So, are you looking for any snapback rally before moving down in the yen? Well, I hope not, Jer. Not really. I mean, I think it's pretty straightforward what his agenda is, and his agenda is, he wants to get the economy going, and the way to get the economy going is to weaken the currency. I mean, what have the Americans been doing since 2008? Since 2001? Weakening the currency, making our exports more attractive to overseas buyers, and in all honesty, the weaker dollar is they're more worried about deflation at this point than inflation, and and as much as everyone here in the room says, I don't know what they're worried about deflation for. Every time I, every time I look every time I look in my wallet, there's a little bit less every month. So, but they have their own ways of looking at inflation and deflation and all that sort of good stuff. But I heard my mate Santelli last week after the Fed announced $1 trillion in stimulus, and I like Rick. I mean, he does a good job, and he said, well, it looks like it's going to be the Bank of Japan and Federal Reserve trying to see who could devalue their currency the quickest, and that's that you get a weak currency, it makes your exports more attractive to foreign buyers, and you try to get a bit of inflation back. You get a bit of inflation back, we get the housing market moving again. Supposedly the housing market's making a comeback. Anyone here got a five bedroom, $750,000 home that you could tell us right now the housing market's not making a comeback? I don't know. I live in an apartment and I'm happy as can be. So, questions? CB, did you go over that? Sorry, your wife was yakking at me. I did discuss it, fairly quick. Basically what I was looking at was these I discussed about how to put up target on gold. 1 second, Greg. How to come up with this 61.8 level, how to set your Fibonacci levels, and the 61.8 held 2 days in a row. Market's weakening up a little bit here. I mean, it's not like it's falling out of bed. I'm not involved. I'm involved in the yen. I'm involved in the pound. I'm as much as I think it's going up. This 61.8% level is telling me it's going up. Stocks appear to be good. As much as I thought they were going down today, they appear to be good. The one thing I could tell you is, what have I been preaching? I'm not sure. As much as I'm bearish the stock market, I'm not short the stock market. So I've lost a little bit of credibility, but I haven't lost any money. And you could be bearish all you want. If you're not short, who cares? If you're not short, let them rally it even further, because when it does come off, it'll come off hard. So I'm a bond bull. I've been a bond bull. I'm the only one, and I'm staying a bond bull. Everyone's going to want to be bearish next year again. They tried selling it this year, and it didn't work out for them. Gold. I think I had this up earlier. Do I have a target? The only thing I see, when the 50-day starts rolling over like this, eventually what will usually happen is this market will then eventually go trade down below this 200-day, and I'm thinking it could come down into this 1600 level, and then and as the days go, the 50-day and the 200-day will cross, and I mean this is pointing in that direction. It's like I said, we do weekly pivot points here, and the weekly pivot in gold is 1704.20. So when the number one son does get out of bed, here I could. What did he make today? He made $800 in the gold market today. So considering he traded 3 days last week and made $360 and was very, very happy with $120 a day, he hasn't gotten out of bed yet. And he did tell me that, and I give him credit. I give him a lot of credit, actually. He was that was over. Yeah. Basically, we pulled out our stuff last night. You read my commentary, over the weekend, Jer. We were a little bit bearish. He was picking my brain. Why, well, Dad, why are you bearish? And I explained to him about what I saw from the Fed on Wednesday and all that. And I said, you could take a shot here. You know what I mean? And actually, I think we had a pivot point at 1703 something. And he worked an offer at 1703.20, and the market traded back up through. And when it went back down below the pivot, I can't remember. I don't have my points here right now. But when it traded back down below the pivot, I told him, I said, Hey, don't miss these. Don't miss this market in the 1699s. Don't miss it. And it started coming off a little bit, and he had a bid at 1699.60. I'm pretty sure that's where he hit his bid, and maybe it's a little bit lower than that. But and then all night the market came off, and he kept on moving his stop, and you know, I wake up this morning, I see he's taking his profits, and he's still asleep. But he did tell me. He said, I will tell that I got a couple of stories, great stories about him. But he did tell me already that my father's dying, and my children, because we live 6 hours away from Chicago, my children don't get to see their grandfather that often. But we're all going to Chicago for 2 days, and we're going to spend some time. It's going to be the Loud family reunion, but he told me, he said, Dad, I'm not going to trade when I'm in Chicago. I'm leaving the computer here, and these markets. When I was trading gold back in September, it was moving around, and it was really easy to trade. It's not moving at the moment, so I don't really know if I want to trade it. And I said, you know what? You go make your $200-300 a day or $150 a day, whatever it is. You try to make a little bit of money, and then you turn it off. And but what did I want to say? The best thing that I did for this kid was, because I don't want him sitting in front of this computer all day long. But the best thing I did for him was tell him he had to get a night job. And he's met a lot of young people. He's really having a blast at his night job. And he's a waiter, and he makes between 100 and 120. I think on Saturday he made close to $150 as a waiter. And so when you turn the machine on and you drop $100 in about 5 minutes, it 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 gives you learn the value of money, and he's learned quickly. He's learned. I'm so impressed that he's learned that. If I can make a quick 100, $200 here, and $100 at night, I'm doing okay. I'm starting out. I'm getting in the right direction. So funny, unrelated, but my kid just told me he's becoming a Navy SEAL after he graduates college. Hey, it is what it is, Jer. We cannot control people, places, or things. So, um, okay, more questions. Hit me. Did I miss any questions? My target on gold, Greg. My long-term target on gold is around 11 to 1200. That's my long-term target on gold. My long-term target on gold is when we hear John Paulson is getting out and closing his gold fund, which John Paulson waited 9 years and $1,400. He waited for gold to rally $1,400 over a 9-year period, and then he started a gold fund. And what's even worse is there's people out there moronic enough to give him money for it. So there's a sucker born every day, and yeah. Well, you'll get the conclusion. You'll get the conclusion this coming weekend, Pete. So so when you hear that John Paulson is liquidating his gold fund, that will be the low. I sent out a YouTube video. He is pretty bullish. Who's bullish? Paulson? The guy in the video. Oh, okay. I'm gonna tell you one thing right now. I send out that Gartman letter. I don't read it. There sometimes are things I send out I do read. I try not to read other people's stuff because I get influenced by it. The only thing I know is, I sometimes think that, I'm not as smart as the Goldman Sachses of the world, or the J.P. Morgans of the world, and then I make great calls in markets, and I mean this summer, I called for a capitulate high in the bond market, after that June 1st or June 2nd release of payrolls, and basically called the low and bought the low in the S&Ps at like that 12. I think I was buying them at 1268 and a half, 1269. And I mean, that was the low for the year. That was the low of the break. So I begin looking at, and I begin to say to myself, don't discredit your ability. Even though I still think at the end of the day, I'm not as good as the smartest people in the world, but I try not to, whatever. Did I understand you correctly in your Saturday webinar? The second pivot point is it is important, especially if you're long and we're moving up to and it wouldn't be the second pivot number, but it's actually the second support or resistance number. It's not that they're important, but they tend to prove good levels of support and or resistance. And then when I do the weekly points and we get there, they're really good. And here, I'll just use that as an example. The weekly point in the gold market is 1688.10. The low last night was 1687.50. So that's the second point below the pivot in gold. The weekly, 1688.10. So, I mean, 1687.50. The market's 1697.50. I mean, I don't know. I wasn't awake when the market traded 87.50, but my son knew that there was that point there, and I did tell him that if we break 1790 even, move your stop down so you can sleep until, what is it, 10:30? He's still in bed. So and I woke up this morning and he moved his stop well down. It's like, wow. I mean, this is going to be so much fun sitting next to my son and teaching him how to make it and keep it. That's the name of this game, keeping it. Questions, hit me. Louise, did I answer your question? And Louise, I know you're in the TNT class in January in Mobile, and I'll talk about that, Jared. We're in the TNT class in Mobile, and that'll be one of the things we'll be discussing in the class. One, I want you to bring a list of rules that you feel you use and break, and another thing is going to be writing down questions about the PowerPoints and how to use them, because the PowerPoints are really powerful. They're a very powerful tool, and you need to learn about them. So, all right, Gary, Jerry, what's your question about E-mini S&Ps? Oh, I see there. What'd they get them up to? 19 quarter. Huh. Go figure. Oh, here. Speak of the points. Anyone check your PowerPoints today? Is it the second resistance point or the third resistance point? 19 and a quarter, the high of the day. Who's got their points in front of them? I guess I could pull mine up. Third. Thanks, Pete. Thanks, Jeff. Look at that. Nailed the high. I don't know. Nothing ever ceases to amaze me when it comes to these points. I came across this formula in 1994. People who have taken the TNT class or are in the TNT class, I already sent you the spreadsheet with the formula embedded. You should, if this game's about doing your homework. In your previous career, you didn't walk into an important business meeting without doing your homework. If you're not doing your homework here, you're not earning. And part, believe it or not, read my commentary. I believe. January, I think I started in the business January 7th or 10th or 12th or something like that. I started in January of 1979, so this would be the beginning of my 34th year. And what a blast I'm having. What an absolute blast. So Jerry, what am I thinking about the E-mini S&Ps? Well, they don't want to sit down. What can I think here? What can I think here? Well, the first thing I'm going to do, I'm going to move this over like this. And then I'm going to throw up this, another Fibonacci level from high to low. We'll expand this a little bit. We'll kind of move this over 14, 28, 26. Well, if we get up to that 1420 level, that's halfway back on the whole break. Obviously, if we nip up to this 1423 quarter half level, that's the 61.8 level. I mean, are we going to get there? I still don't believe it. Oh, one thing I can tell you, if you one thing that has listened for the well, I'm not sure now if it's still going to be there. Nope. Hear that ding? This is the Euro Stoxx 50. I'm getting a sell signal in the Euro Stoxx 50 today. See the little diamond up there? Closing right. Well, actually, my charts are delayed, but that market's closing right now, and so we'll see how that But this that in the DAX, I was having one in the DAX earlier, but the one in the DAX went away. With this rally, it went away. But when the DAX was trading lower, I definitely had a sell signal. So, I mean, Europe has led this move. I mean, I don't know. Is this becoming toppy? We got RSI sitting up here above 70. I don't know. 2 weeks left in December. Do you really need to be shooting from the hip at this point? That's the most important thing. That's what I was bringing into the DTI trade room today. We know, Jerry Friedman, you've been in this business as long as I have. What do the big boys do the last 2 weeks of December? They're not even here. They're out with the missus. They're doing Christmas shopping. They're not even in the game. They take their books, they're trading them over to their junior traders, and they tell them, I trade 100 lots, you trade 5 lots. Okay? The juniors aren't allowed to speculate, big, but they still are allowed to have an interest. The big fund managers, are they still shooting from the hip this year? When Apple is the number one stock held by fund managers, if they didn't make their money this year, I don't know what they're going to do. But questions, thought, envelopes are the only words on the floor. Yeah. Well, that's right. Everyone's going to. I know in England anyhow, they're more worried about the Christmas parties, and I'm not even sure if they do Christmas parties anymore. Times are tough. You happen to have DAX and E50 symbols for CQG, anyone? Oh, sorry, Jer. I don't. I mean, it's been a long time since I used CQG. I mean, a long time. Questions. Come on, hit me with questions. Let's go. Charts you want to see? I see Dave Barton's typing. Pete Adams is typing. Crude oil. We had crude up here a little while ago. I looked at my PowerPoints. I had a PowerPoint at 80. Well, I have a halfway back level at 87.77. I had a PowerPoint at 87.68, and I have the 50-day moving average, which is downsloping, coming in at 87.66. So I had my offer in at 87.68. They traded up to 87.62. I missed selling crude by 6 cents. What do I think? For the longest time, I've been thinking about this, and that's why I threw the chart in this weekend's commentary. I mean, this thing, with Wall Street, with the S&Ps back up here, what, 1420? With the rollover, that's like 1425. Crude oil isn't confirming the move in the S&Ps. I mean, it's not confirming. And crude oil's telling me that one of the markets is lying to me. Either the crude is too cheap or the SPUs are too expensive. But the correlation, for most of the year has been stocks higher, crude higher, and it's not happening this time. And the same thing with the gold. It's not happening this time. And so, we'll see. But I mean, the bulls are in control on Wall Street, and it's hard to get in their way. Dave, I'll throw up a pound. Pound's just boring the hell out of me. I'm short. I'm wrong. I'm taking heat. I sold a little bit more this morning, and there's nothing we can do. I mean, I had that. This definitely looks like a Head and Shoulders bottom. The biggest problem was it should be down here. Head and Shoulders bottoms at tops of moves. It should be at, and I can't. When I see stuff like this, I'm just thinking it's just a matter of time, and this thing's going to turn around. But at the moment, I'm getting squeezed. I mean, they got me by the short hairs, and I don't know what to do about it. So, what's up with the gaps? Since you speak of them a lot, what gaps, Dave? What gaps? Oh boy. Well, gaps are an old school type technical analysis, and I'm old school, and as you see, you don't really see gaps that much anymore in like a British pound chart because this is a 24-hour chart. You don't really see gaps that often anymore in a treasury bond chart because this is a 24-hour chart, except for that little gap there. That was that rollover gap. This little gap over here, that was that rollover gap. How about this rollover gap, huh? This whole week, I'm saying let's go fill that gap. Let's go fill that gap. We fill that gap. I think this low here is 25, 24, 150.24. What's this here is 150.28. Filled the gap. Thank you very much. Good night. That's a 3-point move. So the reason I use gaps, the reason I use I guess you call them cash charts. I call them pit session charts. The reason I use these is because if you pull up an Apple chart, it's 8:30 to 3:15. Let me chart it with and then it will leave gaps. And for the longest time, and this is through much of the mid, 2005, 2006. I kept on putting out indice charts with the gaps in them, but I kept on thinking to myself, am I going to have to change? Am I going to have to start? And here, I mean, this is E-mini S&P. Does this chart, does that look that much different? I mean, the only difference is there's no gaps on this one, but it's pretty similar. It's got that same 3 days down. Now we're having the 1 day up, the 50-day moving average, sat right on it. So the only thing it's missing is gaps. And the reason, and believe me, I was ready to just start not having the pit session chart, doing 24-hour charts. And then the market started coming off in 2008. Let me pull up one of these. And this is still 2011. And here's the high. That's the October 11th high, the all-time high in the S&Ps. And then you can see we started coming off, and then we really started coming off. I think that's not even March 2009 yet. This is the March 2009 lows here. But why we're coming off like this? I'm going all the way back here. What is this? That's not yet. But I'm coming all the way back here, and I'm finding little gaps like this. And this gap was back in 2006, and this gap was like 1280 half to 1291, let's say half, 91 and 3/4. Okay, let's remember that. 1280 to 1290. Now let's start coming off. Okay, we're coming off here, right? This is 08, right? Remember, what did I say? 1280, 1290, right? So we start getting through this low, and I start saying to myself, you know what? Let me go see if we have any gaps from 2005, 2006, and I go, oh my God, we've got a gap at 1280 to 1290. So I tell my readers, that's our target, 1280, 1290. Look at this low here, 1262. We came down. Look at this. In a matter of like 5 days, we filled that gap, and then guess what? I will guarantee you, this is January 2008. I will guarantee you that the Fed cut interest rates, and you covered, and this day the market closed at 1341. 1341. I mean the low here is 1315. So on the day of the last break is when we covered our shorts. And then I started telling my people, well, now, let it go maybe 10 handles through 1080, and you got to think about getting long. And, and then you probably took 10 handles of heat. But if you made 50 handles here on the downside, you can afford to take 10 handles of heat. And then the market comes roaring all the way back. Even if you bought them at what did we say the gap was, 1280 to 1290. So if you bought them at 1270, the low that day was 1262, but the market closed at 1309. So there's a 39 handle profit. You probably just took that. The market comes back off the next day and trades down to a low of 1270 and closes up here. I mean, that's why I use gaps. That's why I use gaps. How, if any, do these points relate to standard deviations? Like, Jeff, for the longest time, I looked at Bollinger Bands, and I like Bollinger Bands. The only thing is they I don't know that I don't use them as part of my analysis. And if you use them as part of yours, that's great. I think sometimes they get they get to be where they don't come into play for months on end, and I don't use them. And and the way I look at the way I do things, if I'm going into my 34th year, and if it's not broken, don't fix it. And not too many people in the last 2 months have taken a trading account and doubled it, but I have. And that was kind of thanks to the yen and thanks to a few other little bits and pieces. But if I start with, do the points that you calculate relate to standard deviations? I know the points that I use are, and Jeff, you have the spreadsheet. You have the formula. The points that I use are Fibonacci. It's a Fibonacci-based formula, and I mean that's the best I can give you. I'm not a big standard deviation Bollinger Band. I'm really not. I'm more into, and you know me, I'm a huge gut. I mean, that gut trade last night for my son in the gold. That got him an $8 winner in gold on a Sunday night. Just and I honestly don't think it's over. Questions? And believe me, I could go find you other gaps that worked out like this. Here's a low here at 12 even. Here's a gap. What's this gap? Oh wow, look at this. Look at this. Here's a gap right here that is October 05. October 05. This high here is 1201 and a quarter. This low here is 1203. So guess what? That was our target. I'll guarantee you that was our target. And I'm saying, you know what? We're going to go fill this gap. That's our target. 3 years later. Is this it? No, this isn't it. Here it is right here. 12 even and 3/4. That's our low. 12 even and 3/4. Filled the gap by a half a cent and then bounced in the matter of about a month, 3 weeks, up to 13.13, 113 points. But even here, even if if you bought the gap or you said, you know what, okay, well the market went back, filled the gap and it held. Just the sun is awake. Could you look at a Netflix chart? Yeah, let's look at Netflix. The heck with the past. But that's why I use gaps, David Barton, and that's why I will continue to use gaps. So, all right, Netflix, I believe it's NFLX. Oh, look at Yahoo's giving me another sell signal today. Look at that. Yahoo's giving us a sell signal. Go figure. Okay, so I'll get that off of there. Ah, shoot. NFLX. All right, what are we looking at here? Netflix. So your question is, could you look at a Netflix chart? That's pretty choppy stuff, isn't it? I mean, you got a gap up here to, what is that low? 98.52. There's going to be good resistance between 98.52 and 101.79. What's this high here? Close, 94.69. So this is, yeah, this is definitely going to be resistance up here. You know what I don't like about this? Just by looking at this chart, what I don't like about it is these look at these little tight ranges. These are new highs for the move, but that's obviously there's a lack of volume there. There's a little tight range. Is there earnings coming out soon? Something coming out here? As you know, I don't really follow stocks. So this is telling me if you're long, you really got to think about. If you're long Netflix, you really got to think about. If you're long Netflix, you're making money on it. Because if you bought it in the past 8 to 10 months, you're making money on it. So if you're not long Netflix, you have to really be thinking about taking profits up here. This is resistance here in this gap. The gaps are resistance. Questions? We are now at 1421. Okay. Oh, 1421. Oh yeah, they're rallying, aren't they? Oh, well, good for them. Good. I was bearish, but I was not short. So yes, I lost a little bit of credibility. No, I did not lose any money. Questions? Grains and meats. Do you only do day session charts in the grains and the? I don't do intraday. I mean I definitely. I mean there are once in a blue moon will I spot a head and shoulders on a 60-minute or 120-minute chart. But basically the charts I put out are dailies. I'll obviously do some weeklies, and if you did read my weekend commentary, which I'm assuming you did, Gary, I put out those monthly charts. But intraday charts, I'm sorry, I don't. And a lot of people have told me, hey Tony, why don't you start your own room? And so I could call out trades through the course of the day. I don't want to work that hard. Daily charts, day session only. Those are my S&P charts. Those are definitely my S&P, my Nasdaq, and my indice charts are the day session only, and those are 8:30 to 3:15 charts. So, And now I think I don't know. They do it now till 4:15. Whatever they do it, I don't know. They changed something, but the charts I use are 8:30 to 3:15. So did that answer your question, Gary? And what do you want to know about the grains and the meats? If you want to know anything. No, I don't. I use 24-hour charts there. Or whatever they are. What are they? 22 hours, something like that. There's people still typing. So hey, I'm going to throw that link in again for people who want to sign up for the. If you haven't signed up yet, there's the link. What do red and green on your e-signal bars mean? I don't even know what you're talking about. E-signal bars, red and green. What do you mean? Are these different colors? Is that what you're saying? On side. I don't over here? See Dave, other side. This side over here? This red and green. I wouldn't have a clue what you're talking about. See, I'm colorblind. And red and green really doesn't work for me. Green is one of green is one of so so I got a funny feeling. Well, I don't know what color this is. This might be red is higher or lower and green is higher or lower if that's what I'm but I can tell that they're different colors, but I wouldn't have a clue what color they are. And in all honesty, a couple of years ago, did I only ever find out that some of these bar charts have the red ones are for up and the green ones are for down, or vice versa. And after looking at charts for 32 years, I didn't even know that they were different colors. So, and if you saw my wardrobe pre-marriage, it was basically a lot of black and blue, and then an artistic type lady who not invented who I can't think what the word is. She put color into my wardrobe, and uh, and then and then after we got divorced, I would have to call her up from time to time because I did have a few things that I liked, and I'd have to call her up from time to time and say, "Hey, do you remember that shirt you bought for me? Can I wear that with this?" So yeah, it's the old colorblind stuff. It's fun stuff. You should see me driving down a, an unfamiliar, very well lit up street at night, and all of a sudden, four of the lights will turn from green to yellow, and for me, the green light blended in with the street lights. So when you're colorblind, you get to memorize a lot of your immediate vicinity, your cities. You get to memorize where the lights are because they sometimes at night they blend in with the street lights and you can't see them. For anyone who knows someone who suffers from color blindness, questions? Okay, well, I don't see anyone typing. So we've managed to knock out another 55 minutes. I hope this was helpful. I truly do hope this was helpful. Um, my positions are pretty much unchanged from when we started this. And, I don't know if anyone's, this NASDAQ has come roaring back. What is that? What does that NASDAQ chart look like? Well, there you go. As that comes roaring back, you could see they call this like the death cross when the 50-day and the 200-day cross. So we'll see how this NASDAQ acts in this level here. The 200-day comes in at, hold on, I gotta pull this up. The 200-day comes in at 26.68 to 26.69, and the 50-day comes in at 26.52 to 26.53. So we're almost right there on the 50-day. So my pleasure, Jeff, and thanks, Louise, and we will obviously see you in January. All right, I see Pete Adams is typing. Thanks, Tony. Best to you and your father. Thank you very much. My best to everyone here. If I don't, I'm trying to think. Well, next week is you know what? Actually, I will not be doing this. I will not be doing this next week. So anyone who has subscribed to the weekend only service, the following week we will. No, next week is Christmas Eve, and I'm on the road. And you know what? I knew when I took over this doing these Monday webinars that there would be, how am I going to do a Monday webinar when I go away on vacation? So I always said that I would for people who subscribe to the weekend service. And the weekend service is really, we started this Monday webinar for the weekend people to get them to sign up for it. And so anyone who is weekend only, they'll receive my commentary all week, the week between Christmas Eve and New Year's Eve or whenever, and as a sort of as a bonus for me not having this session. So I will not be doing this next week because it's Christmas Eve, and you know what? And I'm not, and it is what it is, and you know. I think I do a good job year round. So I'm sorry if anyone thinks they deserve a rebate. Send me an email. All right. Anything else? Thank you, Pete. Yeah, I'm going to be with my kids, and I'm going to be with my mother and my father and my sisters, and they're going to be with their cousins, and it's going to be an interesting Christmas because the last time we all spent Christmas together, TNT is January 22nd to the 24th, Jeff. But the last time we all spent Christmas together was probably 8 to 10 years ago, and none of the kids were of drinking age. So it'll be interesting to see how they all interact with a little bit of alcohol in them. And you also have to remember that the fruit doesn't fall far from the tree. And Dad had his own issues with alcohol. So we will see how things go. One thing I know is, I'm living with my two oldest kids at the moment, and they're both of age. And I love them to death, but they're not allowed to drink alcohol in the apartment. And they abide by Dad's rules. And we went out and we bought Christmas presents together on Sunday, and the two of them both had hangovers. They both work Saturday nights. She's a waitress, he's a waiter. They both work Saturday night. They both made over $100 each doing their job, and then they went out with with the work people that they work with. And we're sitting in Verizon Wireless on Sunday morning, and they both have massive hangovers. And I finally said, you know what? I'm just driving you two home. I'll do this all by myself. You will get what I get for you. So it will be a very good Christmas for my children. They all got new iPhones. So. All right. Apples, yes, they don't. Merry Christmas. Merry Christmas, Carol. And cheers all. There we go. 11 o'clock, straight up, 1 hour. Thank you all. Thank you very much. Have a wonderful, wonderful Christmas. And we will, I don't know when I'll be doing this next. Obviously, the following Monday is New Year's Eve. So maybe not until the first week in January. So, you know what? I need some time off. I work really, really hard. And brilliant. Cheers all. Thank you.